Senator Toomey.
Thank you, Mr. Chairman, and thank you, Chairman Bernanke, for joining us. I'd just like to follow up for a moment on the point that the senator from New Jersey was making. I think, if I understood the gist of what he was saying, we might have a lot of agreement on this, and that is whether we like it or not, it's certainly possible and actually looks quite likely that the sequester will at least begin. And as it is currently codified, it is without regard to any sense of what are higher and lower priorities in the various agencies that would be affected. It's hard to imagine that that's the optimal way to go about cutting spending. It's impossible for me to believe that all spending is equally meritorious and that every category of spending within every agency has equal merit and equal priority. And so it seems to me that the most sensible way to go about this would be to give some flexibility to the people who are closest to these spending decisions, the agency heads, the administration, the OMB, so that they can at least make the cuts that are least disruptive. Some cuts are more disruptive than others. And it just seems that it could be less disruptive to our economy if they had a chance to do this through a thoughtful process than if it has to be done uniformly across the board. Does that make some sense?
Yes, sir.
Thank you. Another point about the sequester, I just have to make, I wasn't going to get into this, but I just have to strongly disagree with the notion that we have some kind of severe austerity program that's about to kick in. We have a federal government that has doubled in size in the last 10 years, 100% growth in total spending. The sequestration contemplates 2.5% budget authority reduction, which, as you know, about half of that would be actually spent in this fiscal year. So we're talking less than 1.3% of federal spending and outlays that would be curbed. The fact is, if the sequestration fully goes into effect in fiscal year 2013, the federal government will spend more money than it did in 2012. It's hard for me to understand that as a draconian spending cuts and austerity. And by the way, by my math, the actual outlay is a reduction that's equal to about 0.25% of GDP. How that has a disastrous impact on GDP growth escapes me. And frankly, the idea that we would somehow postpone it and promise that we'll make cuts in the future, I think the credibility of those promises would be worth zero, and our economy would respond in a very adverse way, because it would see that we have absolutely no willingness, no political ability to begin even the slightest imposition of fiscal discipline. And so I think that has very negative implications. My specific questions for you on monetary policy, Mr. Chairman. One, you talked about the fact that inflation has not manifested itself as a problem by conventional measures at this point. I take your point. To what extent are you concerned about asset bubbles? There are people who think we have bubbles in the works right now in Treasury securities, in agricultural real estate, some even in the equity markets. How do you know when there's a bubble, and how concerned are you that this absolutely unprecedented monetary policy could manifest itself in inappropriate asset appreciation?
It is a concern. As I said in my remarks, we're approaching it two ways. First, we're putting a lot of effort into measuring, monitoring, assessing asset prices and financial activities. Secondly, we are trying to make sure that, to the extent that there may be some frothiness in a particular asset class, that the holders of those assets are prepared to deal with the losses. So, for example, banks have twice as much capital today than they did a few years ago, and we test them we stress them according to different possible scenarios where asset prices move sharply, and ask, would they still be able to lend and be stable?
And I've got very little time, so I acknowledge that, but I think you would perhaps would agree that it can be very difficult to know when a bubble is really forming and it's getting frothy, as opposed to being driven by fundamentals. And the other concern that I have, as you mentioned earlier, I think in conversation with Senator Shelby and perhaps Senator Corker, that you're confident that you have the ability to unwind the very large balance sheet that you've got. No question you have the ability to unwind. What worries me is the impossibility of knowing the impact of the unwind. For instance, just the suggestion of maybe a little bit more dissent within the FOMC than people previously thought existed precipitated a significant sell-off in equities a week or two ago. What would the impact be of actually having to liquidate a big portion of your holdings on the bond market, on the equity markets?
We don't anticipate having to do that. We think that we can.
Not ever?
We could exit without ever selling by letting it run off, and we could tighten policy by raising interest rates that we pay on reserves. That would be one strategy, for example. In any case, we have said that we will sell slowly with lots of notice, and we will, of course, also be offering our forward guidance about rates so that there will not be a shift in rates expectations on the part of the market. So we're giving a lot of thought to these issues. Senator, if I just make one very quick point, there's no risk-free approach to this situation. I mean, the risk of not doing anything is severe as well. So we're trying to balance these things as best we can.
Thank you, Mr. Chairman.
Senator Warner.